Good morning and welcome to another full transparency trading session where I'm your host Sebastian, and today we're getting into the pre-market moves. As you can see, last night took a little play here, about 79 bucks or whatever, nothing crazy, but we're right back in that area, dead centered on these trades. So right now the range of the market is only $1,200. I would not trade this because you either have to get in at the very bottom and then it could break out, or you need to get in at the very top and then again it could break out. Right here at 8 o'clock in the evening, right? We hit the high and we've been kind of cruising down ever since, but now we're making our way right back up to that high. So it's just not worth your time. Now, if I had more of a range, like you give me a $2,000 range, I will trade a $2,000 range, and that's from here to down here. As you can see, that's $2,500. Now that's the type of range that you want to trade. You get a nice hard ceiling, which is where you probably get in about right here, $2,300. You get a nice hard floor, which is what you can get out right here, give you about $1,900 to $2,000, and then you play within that range. Usually I'd hit about 50% of it, so I'd be aiming for about $1,200, or I'll hit like a fourth of it. I mean, not a fourth of it, like a third of it, the $800 mark, which is all good money. And then the first place where I'd be looking to lock in is right here at this line, $300. And then every time we hit another $150 mark, I'm looking to lock in some more. So there's 190. Here is 800. Basically, fill these entire gaps going down here. And then you'll notice something beautiful about these higher time frame points of interest. Notice that we run right up to that bad boy, we come right down to that bad boy, and then we get the opportunity to go right back in. So you have all of this space here. So whenever we're in empty space like this and we're just running, if we don't hit down here, I won't have an entry, and I won't jump in late on this play. I'll wait until after we get above the line and pull back to the line, and then you get from line to line. And every time you're going line to line, it's like $300. But it's a nice safe play. That's $390 actually. It's a nice safe play. And then I'd be looking to reach the next line. But if we have a situation like this candle here where it pulls back, then I'll just take this line there and be like, all right, cool, we're not gonna reach this right now. But awesome when you do get like a candle like this that actually touches the line exactly on a pullback and then goes basically up to the next line, giving you like a full 730. Of course, you double that up with two contracts, you're at 1,460. But and then when you're in a channel like this, I don't even bother. So you see, I took that first trade and I was like, nah, this don't look good at all. And I moved on with my life. But the first trade was worth $200. You know, this don't look good at all. Went on about my business, and I could have held for a while, and I would have made it to the $700 mark. But look at all the $500 right here, $500 at this point. But look at all of the choppiness that I would have had to sit through in order to do that. It's just not worth it. I'd rather the market have a nice long run like it did here, where even though it's choppy or whatever and it's pulling back, once you hit this point right here, you're pretty much taking off. Boom, you get to the next line, choppy, you break that line, you're taking off to the next line, choppy, you break that line, you take off to the next line, choppy, you break that line, you take off for the next line, you don't reach the next line, and when you don't reach the next line, you know that the market's going to reverse on you. But it's all about these higher time frame points of interest. Now, what I believe the market is looking to do is go ahead and cover this last few dollars that we have to get to $599.60. Once we finally break $599.60, which is a very hard ceiling on the daily, we're gonna make our way towards that. You see $599.60 right here. We're gonna make our pull this down because it's not the right spot. $599.60. Then we're gonna make our way towards this 601, leading up to this point right here, 603. So we're gonna start to mark these out as we make our way back up on the daily. These are very important points on the daily for there to be reversals, for there to be points of entry. I believe after here we are, if I can just stop right here and be. Draw out the rest of the chart. I don't have a supply zone or anything drawn up here for a reason, because until we break this area, we won't have a real supply zone. This is just the highest the market's ever been, and we're kind of reversing up and down off of it. Now there will be a reaction off of this blue line here. As you can see, this blue line that I just put over here when I couldn't even side of the screen, meets up perfectly here, meets up perfectly here, goes across, meets up perfectly there. That's what you want to see. Look at this blue line here, touching perfectly there, having a reversal, having a nice reversal off of this. Just ideas as to what the market can do by going off of the higher time frame. There are a lot of candles in the middle and stuff like this that I don't even bother marking out because I want the larger portion of the move. It's my alarm to wake up. I want the larger portion of the move than I do the smaller portion of the move. And yes, these are daily candles, so they're gonna have great movement and stuff like that. This one right here is important to move out because of the gap up. So it's important to mark this one out. See if there's anything else that's important to mark. No, not really. I mean, I can hit this one right here is a good one. There's multiple, there's 3 touches on this. And you can just see it. You don't need to you don't need indicators or anything like that. You can see that there's multiple points where it's dead even. If there's multiple points where it's dead even, you better mark that out. You'd be a fool not to, because that means that every time we hit here, we have some sort of reaction. We pull it down, we pull it back up to that. We pull it down here, we pull it back up to that. Pull it down here, we pull back up to that. We come down to it, come down to it, come down to it, and then finally break through. You know, another area where there's a multiple touch is like right here on the daily. So cool, we'll mark that out. That's it. I mean, that's a 50-cent difference between here and here, basically. Like I said, we're slowly making our way back up. We got about 3 minutes before the market opens. I could have gotten into a trade right here on the 5-minute, and as you can see, we're heading up to breakout. And what we're looking to break is this point right here. This 760. So as we approach 4 o'clock, we see that clearly the market is going in a positive favor. And then as we break into the next few minutes, we'll probably be right here at 25. And we'll see if we get a nice reversal off 25, or if it continues to go up. But I'll mark it out right there, 21, 7, 26, 50. And we'll see where it goes from here. But 4 o'clock should bring some momentum with us. And we'll see if we finally break this channel. It's a very small channel, though. I still wouldn't trade it, because you're not talking about, like, if I was trading this, I'd have to be going in with like 5 contracts to make what you want to make with the 1 contract, and that doesn't make any sense. So just wait it out. You can get in down here at 64, see how much that's worth. It's better just to wait it out and see where the high is. Right there, 700. Right here is $1,000. So if you didn't get in down here at support, which mark that out because it's support, then it's not even worth going in right now. It'd have to really pop off at 4 o'clock for me to get anything worthwhile. And we're heading towards resistance right now. Now what I like to see is a go for like right here. When you have a $1,700 range, then I'll be looking to hit this point right here and take it to the downside. So let's say I put 1 contract here and open up trade. Put that to 30. Put that to 2,000. No, we want to be reasonable with it. Put that to 1,500. 300 ticks. And there you go, taking us from here right back down to this area, more than likely hitting this point. So I go to $1,000. So let's do 200 ticks to 1,000. And then click sell there. And then now if we activate this trade, it'll pull us on down to right here, and we'll make $1,000. I don't think it'll immediately go back to an area like this. This will start acting as support. And the most likely thing to happen is that it hits here at 820, and that's about as far as it goes. But you can see that we're starting to break out as we head into 4 o'clock. We got about 30 more seconds. So we'll watch this next 30 seconds together, and we'll see where it goes. Since it's only 30 more seconds to 4 o'clock, we want to see if there's a hard reversal off of this 727, or if we continue to push up. If we get a hard reversal 727, we're looking for this 662 right here. My trade is here, waiting for the pull up, and then it'll rally on down, and that'll put us higher than this area right here. So that will be a reversal area once we reach it. As you can see, it's officially 4 o'clock. We haven't quite pushed up to this line yet, but we should be pushing up to 726, 727, and then reversing. It won't immediately fall back from there. It's going to continue the momentum going forward. But the play would have been in to get into like 3:10, 3 o'clock in the morning, going to the upside. So here we are heading for that 727. And we'll see if we reverse off of that. If we can finally break this area, we can break this area, then we're going to move up to my next spot, in which I am perfectly safe to aim for $1,000 and just kind of sign out for the day. Here reaching this point right here. You can tell that it's resistance because it's fighting its way up there slowly. But how you know it's going to cross is we're at 596.98 right now. We should go to about 597.15. And then that'll put us above this line here. And then, as always, these lines aren't perfect, by the way, but they're pretty good. Starting to see that we're falling back. It's going to get above the line. I'm not going to torture you guys with another several minutes of watching just to get to this line here. We'll leave our trade open, let you know how that goes, and then we will get to it in a little bit. We're at 597 right now, looking for another 15 to 20 cents on this play, which will cross this line right here. I still use SPY, even though I've been trading ES and NQ for a little, close to a year now, almost like 6 to 8 months. I still use SPY as my barometer because the S&P 500 is the heart of the markets. Okay, if the heart is healthy, the market is healthy, and it's going to continue to go up. If the heart is not doing so well, then the market's going to continue to go down. So the S&P 500 gives you the full view of the market. And you can use SPY on a weekly basis because it's just so much easier to look at than SPY on a weekly basis is easier to look at. You can find your weekly ranges versus all the numbers that you have over here on NQ, and then all the numbers that you have over here on ES. You know, and I still have things drawn out here from like way before, but as you can see, we're months beyond that. I don't trade ES anymore. I trade NQ now. NQ is a highly lucrative stock that it takes about 2/3 of the time to make what you would make with ES on NQ. So that's why I transitioned over there. I was very stubborn about coming over here because I was so used to trading ES and SPY or whatever that it took me a while to transition over. I'm not gonna lie, I was very stubborn. When I did transfer over, I was like, oh, okay, I see what we're doing over here with NQ. And now this is where I'm at. I don't really, I'm not the type to trade a lot of symbols or anything like that. I find that if you're a jack of all trades, you really can't lock into one stock, right? But if you lock into one stock or one, maybe like 3 stocks, whatever, it'll really serve you well in the long run. You'll have a great understanding of just that stock and the things that affect that stock, as well as other areas of the market like tech, QQQ, SPY, QQQ, they all run together. Even though SPY is 500 companies and QQQ is only 100 companies, the tech companies being the strongest sectors, they all run together. The difference with SPY is SPY has the opportunity to have other sectors affect how much it moves or whatever. So some days it doesn't move as much as QQQ, and some days QQQ doesn't move as much as SPY. But having the knowledge to be like, I can look at this on a weekly basis and tell you exactly how far we're gonna go is amazing. And that's why I like still looking at SPY whenever I'm in here. 598.76, as you can see, $600. We're trying to make our way back up there, and they're trying with everything they got. This 602 is going to be another beautiful area where we can have some strong rejection. As you guys see, I wasn't going to make you wait, but there we go. We just broke out of the at 404 out of the area here, and I really wanted you guys to see that. And look at where we at on SPY. We're at 597.18. With that said, as we hit 597.20 and touch the next line, I'm done here. My trade's going to activate whenever, and then I'll get my $1,000 or whatever out of it. And once it does activate, I'll come back on and make a video with that. But you guys have a great day. This has been another Full Transparency Trading session where I'm your host, Sebastian, and we're out. So that officially, by the way, puts us higher than the end of market yesterday, taking us to a new height.